Good morning, everybody. Welcome back to Schwab Coaching for our Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner. It is a chilly but wonderful day here in Denver, Colorado. Today, I am pleased to be joined by one of Schwab's regional investment strategists, a good friend, Mr. Mike Urizzo. Hey, Mike, great to see you on this Monday, sir. Happy New Year. How are you?
Yeah, great to see you guys as well. Happy New Year. And I echo the chilliness. It's a little damp and rainy here, but colder than I would like it to be. But we are in January.
Yeah, exactly. It is January. Certainly looks like much of the country is going to be in this frigid temperatures for the week ahead. Perhaps I spent yesterday afternoon at Mile High Stadium watching my team put themselves back in the playoffs for the first time in, I don't know, 8.5 years. It's only been a little while. Froze my butt off a little bit, but my boy and I enjoyed the heck out of it. So we are ready to get down to business with all of you for a great week ahead, our first full week of the year, everybody. So thanks to all of you for joining us. I see a lot of very familiar names in the chat, one of whom, of course, is our friend Connie Hill. Make sure you say hi to Connie and engage with her. She'll take care of some of the stuff that Mike and I are unable to get to in the chat there today. But of course, we're going to keep an eye on things. We hope to bring your questions and discussion topics into the conversation as well. So please feel free to do that for the duration. We do go about 45 minutes in total here. Take a moment and follow us on X. Connie and I are available there. Connie Hill CS, Kevin Horner CS. We try to post for you there throughout the week with notable charts or maybe details about the market that we need to be aware of, upcoming reports, earnings, and etc. All that kind of stuff gets placed onto X, and certainly a good way to get with us outside of our coaching sessions. So we'd love to have you joining us there, everybody. Now, as always, we want to get to some disclosure reminders. Keep in mind here, of course, that our discussion is exclusively informational and educational. Remember, we do not make recommendations, so any expression of opinion should be considered subject to change without notice. We talk options here periodically as well. It's important to remember that options carry a higher level of risk, are not appropriate for all investors. You do want to familiarize yourself with the characteristics and risks of standardized options. And remember, you need to be previously approved before you can place your option trade. So please go through the requisite steps to know which side of the approval process you want to be on. Remember that you can have varying levels of option authority on any of your individual accounts, and you do need them to be approved on an individual account-to-account basis. So very key component there as well. Of course, we talk technical analysis here quite a bit. We look at charts, the historical price action, and how they might relate to the current price action. Just remember that technical analysis should be considered complementary in nature to our broader fundamental research. All right, finally, the agenda. This is all going to be the same. If you've been with us for more than a year here, everybody, you know the agenda. We start that top-down viewpoint, hit the broad major indices for you all, maybe some industry groups, and of course, some sectors in the news. Now, today, we have a slew of upgrades. So we are going to be looking at a number of individual charts there for upgraded securities. And I want to talk about some potential ways to take bullishness into the market. What I mean by that is there's always multitude of opportunities for you to be bullish as it relates to trading in the marketplace. Sometimes that's as simple as buying shares of the underlying stock, but we're going to talk about a couple of different ways today that traders might incorporate other strategies to be bullish. So with that, we're going to hopefully just put a pin in that one. We're going to get back to it. But let's talk about that S&P 500 as we like to start each session here, Mike. Not only did we have a really great candle on Friday, but we have managed to gap higher at the open, Mike. Now, does that orange 20-day moving average give you a little bit of pause in the sense that that's where we've opened at? What do you think about a great start to the week thus far?
Yeah, I mean, look, it's always nice to see positivity, especially when we're long-term bullish on the market, on the world, right, over long-term horizons. But in the short-term window, like you said, that 20-day moving average, seeing that retracement is kind of what we would want to see happen next to start any kind of positive catalyst or maybe positive setup, right? So I think this gives us that positivity. How it prices throughout the day, where it closes, above that a lot. If it can get closed above that, and obviously that'd be a really nice signal. And maybe give us a little bit more positivity, so to say, going into this trade. But yeah, I think it's still a point of caution, right? There's, we've moved ahead. A lot of the uncertainty that got priced into the market over the last few months is becoming uncertain again. And we're, in a new year, so there's a lot of new things. So I think this is a great time to kind of really stick to your core and allow the market to kind of develop and then go, let that be your guiding light, so to say.
I like the sound of that. Obviously, what you're suggesting is having a plan, knowing how you want to approach the market, and then just implementing said plan. Obviously, I'm a believer in that viewpoint. We talk about it all the time here. Of course, the couple of things that stand out to, I think, many technicians on the chart, Mike, nice bounce off of horizontal support. So commonly we'll find that the trend analysis, the 50-day moving average, the nice smooth 50-day average price had been violated, but it's not uncommon to find once violated horizontal support provide the bounce spot for us. So that's an area where some traders start to expose new money, right? Because of course it means limited downside risk. And what do I mean by limited? It's simply that a trader who puts money to work, maybe at that in the span of the lows we saw on Friday, they feel like they can expose that money. And if they're wrong, they'll know it quickly, right? Because maybe they close below the low we had made 2 weeks back. That would be a validation of a breakdown, perhaps, and they would quickly move on. They just simply say, yeah, I was wrong about my timing. I'll move on. So there's one option. The other, Mike, could easily be waiting as patient as possible to kind of break this downtrend. Now, granted, this is very limited in scope, isn't it? Very short term, not a whole lot of negativity with it. And yet, Mike, in order for a bull to really feel like they are able to take the gloves off and just continue back the way we've been, they probably need to see some validation over this downtrend line. Yes?
Yeah, without doubt, right? And it's I think it's also something that we wind up talking about eventually, but it's always worth saying on the onset is we're looking at the S&P, which is always the greatest starting point, but what's been going on in the S&P? What are the constituents been doing in that? That's my next kind of step. So I think to your point, yeah, this is a setup, right? We're looking for that pattern, develop it. This is that early pattern development. Now we're going to kind of be a little hawkish, so to say, of that until we get that kind of confirmation, like you said, whether it's that breakout above that prior resistance or it's, a volume confirmation, or honestly, hopefully we want that kind of news driven event that also confirms that, yes, this could be a positive setup. The challenge is once the news comes out, that setup is already made that move. So I think this is a great starting point. If you're not sure, you start to think, where do I believe this pattern can go? As a trader, where do I set up my trades? If I'm in a trade, how do I adjust my trade? So I think this is a great, timing, so to say, where the way the S&P is setting up to level set your year.
Yeah. It's so far good start. We just want to see a little bit of continuation here for the day. We love an open like this on the bullish nature side of things, right? If you're bullish and you've been waiting for that short-term weakness we got at the end of last year and the beginning of this year, if you're waiting for that to subside and put you on the path back to what had been working for the better part of the last 3 years or so, then we want to see the continuation through that downtrend line first. But it's a good start from the short-term bounce off of this horizontal zone in the neighborhood of about 58.25 to 58.50. So that's going to be short-term support for the S&P moving forward. Let's just make sure we document that. Now we know what to look for on the downside as we move forward, at least as it relates to the SPX. How about the NASDAQ 100 today, Mike? 1.25% move. We're going to see that it's being led by semis again in a moment here, but a nice bounce from another area that many traders would tell you was strong support. In this case, the 50-day moving average.
Yeah, I mean, it's hard to delineate between the charts unless you get really granular, right? They almost look identical. I know they're not. And there is a little bit, it looks like there's a little bit more volatility in the NASDAQ than there has been in the S&P of late. So I guess that's another thing to watch for. And as you're drawing it, that's a much, much steeper line of resistance than the prior.
Yeah, and having opened and gapped the 20-day looks a little different, doesn't it? And again, we don't take that to mean something definitive, but it is notable that the 20-day on the SPX, we are at it as potential resistance. And here on the NDX, we opened above it. That might actually be short-term support for some traders now.
Without doubt, especially if you're you're kind of, for lack of a better term, maybe you're using both index to play off of each other or to help you set up other trades. You got an early signal in the S&P. You got that extra confirmation you're hoping for in the S&P in the NASDAQ. The constituents are the same. Now maybe it's look under the hood and see where the opportunity is within those two indexes.
Yeah, of course, there's always sector relationships we can keep an eye on there. And I think it's fair to suggest, Mike, If we looked at just and again, this looks a little different because the shape of the trend remains upward, right? There hasn't been a breakdown of these moving averages, but that zone of support looks to be pretty consistent right in this area where a trader who says, you know what, a violation of the 50-day is one thing, but in order for a strong bull, a bullish trader who says, yeah, this is just continuing what's been going on, in order for that to feel like a breakdown, we probably would have to trade through the low we made last Thursday at around 20,800 on the NDX. Trades through there on a closing basis could be indicative of a further breakdown in this trend. That is not how it appears off the open, though, today, Mike. So we're going to take a very optimistic slant as it relates to the NDX and hope that we get this candle that it looks like right now is what it looks like at the close today. That would be tremendous for us. So that's what we're hoping for as it relates to the NASDAQ. How about the small caps? Russell's been in a bit of a struggle, Mike. Our stair steps got broken. We took the elevator to the downside about 2 weeks back here. And now we found some support. But, Mike, talk to me about what's gone on the last couple of weeks here. Does this feel... when you look at it, does this bounce feel dubious or does this bounce feel like, oh, what a great opportunity to be back into the Russell?
Yeah, I mean, on the surface, just looking at it like this and kind of to your point, right, we've been talking about the smaller indexes or the, like the Russell, maybe some small cap, mid caps. And I think those are the first things that get hit, just like they were the last thing to participate in the big move throughout the year. So is this, again, a precursor? But to your point, just on this chart alone, if we're not thinking about anything other than the Russell, yeah, it feels like this is a little bit of a relief bounce off of some selling pressure, and I'd like to see where it goes from here. But man, I don't like that it's stopping right at that resistance like that. Really hasn't made that upward move. And bluntly, given the type of indexes there are, you probably have to see a very sharp outsized move in the S&P or the index, the NASDAQ, to actually be able to get the lift out of this. So I think this is probably a good way to either think about resetting some of your stop limits if you're in this type of trade. But yeah, I think it's a little alarming to me that it stops kind of right there.
It stands out, doesn't it? I want to be wrong about this one so badly. I want this to be a green line, not a red line. Why is it red for me now? Well, that's resistance, unfortunately, right? We'd noted this as resistance a number of times. So we had a nice range in here. We had one right here. We had it as support. Okay, so here was looking fine. Great bounce right off of it, new high. And then this day, like I said, that 2 week ago candle was so aggressive to the downside that we just completely blew through it. So there was no intraday really support here that gave us any opportunity to hold up. And now we have to look at it as resistance simply because it's been such an important level for us. 2,300 here on the RUT is a level we got to get back above if we want to continue that recent uptrend. Otherwise, it stands right now, unfortunately, as a potential rejection spot. And more importantly, if you're a bearish short-term Russell small cap investor trader, you're going to look at that 20-day probably and think, boy, above the 20, I can't be bearish anymore. So that maybe says, Mike, that right now, at least for the bears, the risk-reward ratio really suits them more so than the bulls at this point. So yeah. Go ahead. You want to add anything?
No, I was going to say without doubt, and just saying this out loud, right? If we look at the timeline of the year, you got a really, really big move in the Russell as well as the other indexes right around after the election when some of that uncertainty was off the table, and then you see how quickly it unpacked that and didn't care about that anymore, and it moved on to what it is. So my point is, I had a colleague of mine that used to, when stocks would make this type of drop and they would break support, you'd be like, I don't understand why the stock, it should have never been at that price before. And while that sounds kind of, primitive, for lack of a better word, there's some merit to that, because why did it rally above resistance before? Well, there was an event. That event no longer exists. So now we have to kind of compensate for that and start to look at that chart. And maybe there's a point where you're like, hey, that was an anomalous event where it broke out above, but my rule still held because resistance winds up being resistance long-term. But like you said, we'd like to see that turn around, obviously, to get that positive action we're hoping for this year.
I really like that you brought that up, because you're right, man. Narrative and story and the detail around why something happened the first time has a lot to do with whether or not it's feasible to do it again, right? And yeah, this breakdown of the trend line that I've drawn in, or the 50-day moving average, all of that stands out in terms of price action historically. And then more importantly, just the aggressive sell-off through that level as well. So yeah, it all makes sense when you think back to November, why small caps rallied the way they did, but the unwind has been speedy. And we got to remind ourselves, that's the way trading often works. Bullish to the upside, grinds with these stair steps, and then bearishness comes in and it's escalators lower, elevators lower, sometimes the shaft of the elevator even lower. So plenty to bear in mind on the RUT. Last note, look at that RSI, everybody. We have got the RSI into 48 now. Now we're in a zone where, just as a reminder, when we break down an RSI, if we are looking for this to get back into gear, the RSI has to actually clear about 55 at the midpoint. So the 50 line is the mid-range on this banded indicator, right? RSI is ranged between 0 and 100 always. And often, if this is going to be a new downtrend, as an example, we can't say it is just yet, but if it is going to be that, then you would expect the RSI to rally into somewhere between 45 and 55 and then reverse lower, meaning that the 45 to 55 level becomes short-term overbought conditions, okay? So in the midst of the strong uptrend, that's why the RSI only got down to the 45 to 55 level, never got to oversold conditions at the true 30 level, right? So because it came down to the 45, 50 level, and that's where the trend reasserted itself, that validated for us the trend we were witnessing. So at least as it relates to the RSI, this is kind of notable. We do have it in the area of 50, but what we want to see is pushing through that 55 with the price action. And of course, we would expect, Mike, if price action took off from here higher, we would expect to see the RSI do just that. So kind of all stands to reason, I think. Now, Mike, the big mover today, clearly the semis, nearly a 4% day. We have finally, visually at least, cleared the triangle. Nice move today to start us out.
Yeah, and it's on the heels of Consumer Electronics Show, which I think NVIDIA is going to be the guest speaker. So I'm assuming that probably has a lot to do with it. We're seeing that kind of movement, right? We got through last year that even though the calendar year is very academic in nature because it's really arbitrary, we do see that there is some kind of changes. So maybe there is a little bit of, repositioning in these semiconductors after trimming some of those positions last year. So hopefully this is a good positive start to that. But like you said, from a technical point of view, I mean, this is exactly what we want to see. And this is something that definitely should create some opportunities, hopefully, on either side of the coin, so to say.
Yeah, and if I was going to offer any pauses of enthusiasm, it's only going to be to highlight some areas that we could still get through that would give bulls even more validation. So let me clean up this drawing tool a little bit. The one thing that stands out is we've got these prior highs. So we've got resistance, at least in this vicinity. So we should consider that we could make a higher high if we could get through 54.50 approximately. That would be nice from the technical viewpoint, right? That's one option. The other thing that stands out when I look at this, Mike, this was a wonderful uptrend that was working until it wasn't. And when I draw this line out, this line is still price action is still below it. Could this line and this band of resistance provide a rejection? Is that a possibility that we have to be aware of?
Yeah, I mean, without doubt, right? I mean, you're bringing it up because it's true. So I appreciate the corroboration, so to say. But yeah, I mean, that's it, right? Like we're this could be the new channel, right? Even when we look at the other, just because we're seeing an early development and a pattern we're thinking might develop the way we would like it to for our trades, we're still kind of monitoring that because maybe this is that new price channel. So even when you looked at that Russell before, like that wider channel. So I think this is kind of the same thing. So now what I like to do, and again, this is more of my style of research, so to say, is now that I see that, maybe I'm a little on the fence to your point, or I have a little pessimistic view, even though this seems like a very bullish signal. Maybe I want to go back a little further in the chart to make sure I'm not missing something else that kind of happened. Or, maybe my resistance point is actually, a little lower than it should be based on the longer term trend.
Yeah, and the truth, Mike, is obviously that could be resistance, but I don't know if that's going to be resistance or not. Of course, many traders would use today's gap and go scenario as just that, a reason to be long the semis after such a significant consolidation window. I mean, we peaked to our peak to our trough was really, really tight. I mean, this was July 11, and then we made this low on August 5. So we're talking 3 weeks of selling And we consolidated all of that into that triangle that we'd previously drawn in. And then today you're getting this move higher that makes you feel like, hey, the semis might very well be primed and ready to rock and roll again for us. And certainly some leadership late last week on Friday from NVIDIA helped push and maybe have given us a little bit more boost. But there's been some nice moves here in the semis. And I don't want to throw cold water on it with my notations here of potential rejections, but got to call them out because that's what they are. They're there on the chart. So we have to at least consider them. But what I do want to remind you all about is that you have your plan. You know what it is you're looking for, right? Is today's move the reason to be long semis? Is that the reason you use the opportunity to deploy new funds to the semiconductors? I don't know. But if that's part of your plan, my hope is that you're simply sticking to your plan. That's what we want to. What's what we want to encourage here in our segments, at least. Okay, Mike, some key movers in terms of our sector relationships today. We've got some big moves across the board. What I think is notable is from the reds. We're going to start with the red stuff here, everybody. There's a staples chart sitting on the 200-day moving average. Could be significant. Here is utilities at a rejection at potential resistance there. Not too much of a shock. And maybe, I mean, that kind of looks like a bit of a bear flag where we've rallied into the 20-day and might be retreating to test the recent lows. And then, Mike, again, real estate. So we're seeing some of this risk-off viewpoint. Mike, if we talk just generically around the narrative about what is moving favorably and what is not, we can look at this and say, well, it's clearly a risk-on open because our defensive groups are lagging for the day and our leaders are strong leaders.
Yeah, I mean, it's exactly, the type of trading that you would want to see when you have that kind of bullishness in the other sectors. It's unfortunate that, this is just the way it works, right? Something goes up, something has to go down because of the cross correlation or the reverse correlation in these. So I think it's very, very interesting. Again, though, what scares me a little bit about these charts is what you said earlier with the Russell is just how quickly they made that move. But to your point also, like this is the new norm in the marketplace. So how do we as traders prepare for that? And I think, going through these and like I said, having what you said earlier, I think kind of resonated with me, and I hope it resonates with everybody else. It's like, even though you want to have that optimistic view on the stocks, you want to have that view on the market of optimism, especially early in the year, you're not looking for confirmations to tell you you're right. You're actually looking for the opposite. Hopefully. And that's how you figure out, yes, this is a good trade. My risk reward is in line. So I appreciate you kind of highlighting that kind of quietly, so to say.
You know what, Mike? It is a struggle every single day as a trader. I often find myself looking for confirmation bias, and I try to remind myself that that's not the way to be a successful trader. And what I mean is, I found late last week in certain trades that I was considering or trades that I was in, stocks moving against me. And instead of adhering to my rules, which stipulate, well, you broke through your level that you believed in, why are you holding the stock, move on? I was out there scouring the net, trying to find some reason that my stock would be down instead of just following my rules and being black and white in that process. I need to be more disciplined in my process. There's no doubt about it. But, scouring and trying to find the market, someone's post somewhere that will give me the comfort to stick with my position, that is just not the way to go about it. And I know better than that, and yet I can fall prey, nonetheless, to those scenarios just as well as anyone can. So it's not as easy as we necessarily suggest. We talk about it so much because bringing it to the forefront and keeping it at the front of our discussions should help us to kind of work against and mitigate those risk factors like that. But, just want you all to know, if you're experiencing something like that, you're not alone. We traders are very similar animals. Okay.
Yeah.
How about some of these? Go ahead, Mike. Go ahead.
Just to add to what you said there, as a trader, especially as an institutional trader, more of a momentum trader, in my previous career, I could look at all the charts in the world. I could ask questions of other people and have them look at the charts with me to try to get them to agree that my position is right. But my P&L was always the glaringly obvious thing that you're right or wrong.
Yeah.
Right. So if my P&L isn't right, then I'm doing something wrong and I have to kind of position myself rather than just searching for somebody to be like, no, just hold the course. You'll be fine. It'll be great. I'm like, well, my P&L is really the only thing that matters at the end of the day. That's the byproduct of my process. Not that, you're right.
Absolutely true, Mike. Absolutely true. Let's be better. We can all be better. That's really what it comes down to. All right. What about these positive movers today, Mike? We got some big ones here. Let's start out with tech. Obviously, a fantastic pop here. 2% move. Anytime we can get 2% moves on a full sector, we like it. If you're bullish, that is at least, certainly a positive, but really nice channel developing on tech. 50-day moving average held back to mid-September. Not much to dislike about what you got going here, Mike. And in truth, if you're just looking at something like the tech sector, a lot of traders are just going to manage their risk against that 50-day, waiting until it closes below it for the first time in months.
Yeah, and I mean, this to me, as soon as you put that chart up, it's no surprise to your point, right? We looked at the semiconductors, which are a little bit of a leader in this space. We looked at the NASDAQ, which is obviously the result of all that space. And now you're looking specifically at just the IT space. So this is where that move in the NASDAQ and the S&P are coming from, not the other sectors, right? So again, we're getting more sector rotation is what I'm starting to see early on in this year. So that's something that I want to continue to look at as a trader.
Yeah, we do want to see that. We want to see some of that rotation. We also want to see breadth expanding a little bit, don't we? One of the things that our friend and your colleague, Rachel Deschelle, has brought to the table here in this segment before has been the ability to check out the breadth, the overall breadth of the market, utilizing this chart where we can see the stocks in the S&P that are over the 200-day. That's the first one up here. Then the stocks in the S&P that are over their 50-day. This is the percentage of stocks above those moving averages. And then looking at the NYSE stocks making new highs versus stocks making new lows. So these are looking back 1 year across the board, Mike, and it definitely stands out, doesn't it? Because these are not charts that are confirming our uptrend, but rather challenging our uptrend, aren't they?
Yeah, without doubt. But like you said, we broke those. We rode into on the larger indexes before, right? We rode into that resistance. We fell apart. We kind of hit support. We even broke support a little bit. But so yeah, this is showing you that quickness of the move. Now it's showing you probably in a little bit more of a longer term trend, right? Rather than that 3, 4, 5 day move we saw. Now you're starting to see the overall results of the longer term trend, not just that short window we were looking at, so to say.
Mm-hmm. Yeah. And obviously, here in our conversations and trader talk, it's much more tied to the shorter term viewpoint. But this stuff is very important nonetheless, Mike, because it helps us to understand whether the true trend we're seeing is as healthy as we want it to be. Of course, this doesn't maybe imply the health of the trend in the S&P 500, for example, that we would ultimately like to see, but it does not mean that prices can't continue higher. Keep that in mind. This is a bit more of a long-range view than it is maybe a day-to-day short-term chart view. Okay, Mike, a couple more of those spaces that are moving today. We got to look at, let me see, financials. I think that's discretionary, which is getting a good bounce. I mean, right off the 50-day itself. But financials, I'm going to have to figure that one out, everybody. I'm sorry. I thought I had my details a little more notable here. Let me find it. That's healthcare. I thought financials were, there's industrials. And there it is. All right, Mike. So here's the financials. We bounced nicely. We've got that cross, though. We are right at a crux of potential resistance here. And the reason I wanted to lead with the financials or take us to financials next was, Mike, that we're seeing a number of upgrades in the financial space. We're going to talk about them here in just a second. But, Mike, the trend of financials still looks like an uptrend, lower left to upper right. But we are at a pretty important juncture here with the 20 and 50 coming together, aren't we?
Without doubt, right? Like that's always that cross that we're waiting on, especially in the short term, right? In a longer term trend, it's the death cross, that 50-day, 200-day. But obviously, we're using the 20 and the 50 in this example because of our shorter term minded nature trading. So yeah, I mean, this is a conundrum, so to say, right? When you're just kind of standing at this crossroads and you're like, I really, really have a longer bias, and I feel like maybe that this is a good uptrend. I see some upgrades, positive news, but yet the market is showing me something different. So yes, it's positive, but it's not as strong as we want. And kind of right back to what you said earlier, when you're looking at that RSI, we're kind of at that inflection point again.
Mm-hmm. Yes, we are. Not getting quite the level of clarity that we would like from the financials, but it is a notable nonetheless. And like I said, we've seen a number of upgrades in this space, and I wanted to bring those up. So, Mike, let's use this as our transition to covering some upgrades and even bringing in the discussion topic that I wanted to kick off today, which was ways to be bullish that are more than just simply buying the stock. So let's start with one of these financials that got the upgrade today. How about Citigroup? Barclays got an upgrade on Citi today. So I'll read you the details here. Upgrading Citi to overweight from equal weight. New target at $95. That's up from $70. It says that despite the recent run-up, large cap banks can continue to outperform the market in 2025 as earnings growth accelerates, according to the analyst here for Barclays. The firm, Barclays, expecting Citi to amplify these drivers in 2025. So, Mike, the reaction initially here is certainly a nice favorable gap higher, but I think that this level here stands out as strong run, long range, strong run support here with this ledge. What do you think?
I'm still trying to unpack the fact that it's actually $7.20 and not $72 because of the 2007, 2008. So my brain, as soon as I see
you
a chart in
PTSD, Mike?
Yeah, well, 100%. 100%. But it makes me want to unpack that and be like, all right, it's at $72. It's rising. But if it's really only made that move compared to its peers, it's still lagging to the industry. That doesn't mean there's not a short-term opportunity. I just want to have that awareness. And if you don't know the stock of that well, that's another part of your fundamental analysis that you should be doing, is understanding where it's coming from so that you can confirm where you think it might be going. And maybe the chart's kind of guiding you to that. So, but that aside, yeah, I mean, this still looks like a strong bullish chart, right? We're getting that kind of, resistance. We've been kind of riding above resistance pretty good. It's testing a new equilibrium. And I like that, in charts that we want to be bullish on, or the traders are looking to maybe open a position into, and versus being a contrarian, so to say.
Yeah, and if this kind of falls into maybe a longer range consideration because we haven't yet broken to new highs, but maybe we've validated really longer run support here that a lot of traders would look at and say, well, you know what? I'm good with this stock as long as it holds 67.50. As long as it doesn't break down below there, I've got every reason to stay long. And if you're an intermediate term trader, that kind of fits the narrative in terms of the price action, perhaps. And then when you expose this to a longer range time frame, Mike, it actually stands up as well as it does on the daily chart, doesn't it? So you could look at multiple opportunities here. Mike, one option, as we've covered, and we're going to look at others here in the mix of upgraded securities momentarily, but Mike, if we're talking about the various ways we can be bullish, yes, we can always just buy stock, but we often say that you can be bullish by employing options on the long side and employing options on the short side. So let's talk about the conception of utilizing long calls, or maybe a long, what some would call a long call vertical, as we often do here on the Schwab YouTube coaching channel. And that is simply buying a contract, an option contract, a call option at the current strike series that you're considering, whether that be this January, next month, etc. But also limiting your upside, Mike, by selling another call at a higher strike price. So you can be bullish, but you can also do it with options in a manner that leads you to be more risk defined. Can you talk about that a little bit in terms of the risk-defined approach that incorporating a long option would give the trader?
Yeah, I mean, I think I would kind of liken it to, it's no different than the kind of trades we're talking about as far as, just being long the stock, selling a call, and or maybe being long the stock and having a target exit position or an exit price, and then also having, hey, if I'm wrong, here's my out. The difference with this is you really get to define your risk and limit it, versus being exposed to that extraneous risk that I can't mitigate, meaning those stop orders. We know stop orders are an amazing tool in an efficient market, but when we have those market breaks, we can get sucked into that and maybe get kicked out prematurely. So this allows us to stay in the trade longer with better definitions of my risk. So yes, it limits my upside, but it also defines my downside. And they're harder to do in a natural marketplace where options, no pun, give you the alternative to be able to do that, so to say, right?
Mm-hmm. Yeah, I think that's what a lot of traders like about options. Once they get to the comfort zone of of understanding what the option really reflects, under 100 shares in the majority of cases reflects ownership in 100 shares of the underlying security. Once they get past the standard understanding of what an option contract represents, then the walls kind of fall down around them, and they're able to place these trades and put on scenarios that, like I said, risk defined. It really makes it easier for the trader because it puts a literal time frame on the trade, right? Every option contract has a finite life, and when you set your strike prices, you are also defining that tolerance for risk. So most commonly, traders of these types of scenarios know definitively their best case when they walk in, their worst case when they walk in, and they simply let the trade go in whichever direction the trade's going to go. Right? You just simply allow the market to do what the market is going to do. So if we were looking at Citi here, and again, all we talk about here are examples and education, not a recommendation in any way. Some traders would look at the fact that we've got the $69 rising 50-day moving average. That could be a support area. Some might like the 67.50 as a potential strike series. But if you were thinking that there's more upside and you just wanted to participate if it could get from, say, 73, let's go back to that weekly here, say from 73 to that last peak, which is almost 80. Maybe the trader thinks that they can get this up to $80 a share. Mike, they might look at something like a $70 call with a $80 short call. And that might mean that they have to go out a little bit in time, more so than this week, because this week might not give you enough opportunity from the $80 call side to really reduce your cost on the long call side, right? Because the 80 is still 7 points or 10% out the money. So we might not have that opportunity without going out a little bit. Mike, would you think that something like the January 24 giving us about 3.5 weeks or 2.5 weeks, excuse me, would that make a bit more sense for most traders, you think?
I mean, I think normally the timeline that you're kind of laying out would make sense. For me, my only caution would be we have a huge event on January 20th. So maybe you don't want to have that risk those extra 2 or 3 days out for there. So maybe you would define it back to the 17th in this instance, because there's some kind of news driven event that I cannot mitigate. So the only way I can mitigate that is with time, and kind of what you said earlier too, right? This is a risk defined trade. Limit your upside, but defines your risk. Well, it also defines the amount of time you could be in the trade versus just buying the stock and hoping and waiting and waiting and waiting. If your ideas don't come to fruition, then plausibly. So I like the two-sided part of the trade where there's upside, and even if it doesn't work out, you've at least brought down your costs of the call by selling that other call. So even if the trade doesn't work out and it kind of goes sideways, you could probably still pick up a little income, or at least you didn't expend a lot of money into the trade, obviously depending on the premiums that you bought versus sold.
That's a really good reminder, Mike. And you're right. Unfortunately, if we go to the 17th with only 2+ weeks and look at the 80s, the 80s are only going to bring us 11 cents. That's not going to even make it worth our time necessarily to sell the 80s. Whereas selling the 75, you reduce the cost by about $1. That makes a little bit more sense, but obviously shrinks our window of a profit opportunity, right? We can only make the difference between the strikes. So if we're buying the 70 and selling the 75, that's $5. And if we are doing that mathematically, it's telling us it's going to cost us almost $3 to do it. That means that our best case profit-wise is about $200. And then our worst case loss scenario becomes the amount of money we put on the trade. So you can always give consideration, right, to buy the stock, maybe consider a long call vertical where you sell the option and cap your upside at the same time. That's what this one might be. But there's also an opportunity to consider a short put. And I thought, Mike, let's move off of Citi here quickly and just look at a couple of those others that got upgraded in this space, so we could talk quickly around the potential for maybe selling a put. One of those was on Capital One. And Mike, this is notable because this has been a bit of a longer term consolidation down into the 50-day moving average. Today's price action seems kind of intriguing, but they upgraded by Barclays as well. Overweight from equal weight, new target here is 219, up from 158. Now, Mike, the technical look on this still appears bullish, right? Talk to me a little bit about that third option. Long stock is option 1, long call vertical option 2 if you're bullish, but option 3 could be selling puts, couldn't it?
Well, yeah, definitely. And it depends on what you're trying to accomplish doing that, right? So if we're just doing them for premium, we want to sell some puts that just bring in money, take advantage of the bullishness of this chart because we
Mhm.
don't expect the stock to get to those prices. The one thing that stands out in concern is if you're going to do it for that purpose, there's a pretty big gap in this stock, right? So that gap over time, generally, we wind up seeing them fill. So I'd be a little cautious selling a put too close to the money in something that has made such an outside move and hasn't really consolidated enough for me or for that type of trade, so to say.
Okay, so would you suggest that given the price action we've seen here and incorporating today's candle, which is looking like a hammer at support, on an upgrade no less, would you be looking at maybe a strike price as an example below the 50-day moving average for selling a put, maybe even in the vicinity of those tails we see? Because you only want to be remember, if you're selling a put, Mike, you darn well better be ready and comfortable owning the stock. That is number one takeaway for any short put seller, isn't it?
Indeed. And I think to your point, you're framing it out, right? Like if those are the strikes you're looking at because you feel that this is bullish, if the pattern's going to continue, still think there's upside with this analyst upgrade, and you want to sell something a little closer to the money to capture premium, well, then I just want to shrink my time frame so that I don't put myself exposed for too long. Oftentimes, especially I talk to clients every day of the week about these types of things. And when I have these conversations with clients, a lot of times we're premium chasing versus being risk averse,
Oh,
taking premium.
that is so hard, Mike, to balance that too, because inevitably the trader looks at it and goes, well, of course that's bullish, and I'm just going to scalp this for a couple $100. I'll take my premium and be happy and move on. I don't care about that stock. And that's inevitably when that stock drops, you get put shares in the company you didn't want in the first place. Man, that is the worst, almost, well, not the worst, but one of the worst feelings I've experienced myself. I hate it when that occurred, and I just gave up selling puts on stocks I don't want to own. That was the way I challenged that. So hopefully that's a good reminder for all of you who are considering selling put options as a way of maybe premium harvesting. But more commonly, Mike, I think traders incorporate short puts as a way to really put themselves into positions they want to own at prices they want to own. It's a bit more of a slow and steady wins the race type approach, Mike. But nonetheless, it can work out for the investor who is not who is confident, but also willing to allow time to pass. Right?
Yeah, without doubt. And I think, what you're kind of also stating, or at least in my mind, it's like we're talking about this specific stock and one strategy for this stock. But if I'm doing this strategy, hopefully I'm doing it on a basket of stocks or at least a portfolio of stocks. And now my risk reward ratios start to change because of that diversification. So yeah, maybe I buy Capital One a little too early because I sold my put a little too aggressive because I chased a little bit of premium, but I have other stocks hopefully in my portfolio that can buoy some of that risk. And chances are, unless I'm really, really bad at this, I probably are not going to get put on all of the issues that I sell puts on at the same time, hopefully, because
Hopefully not.
chances are then I'm in a little bit of a vacuum period. But again, to your point, you have to be braced for that. If I bought it at 180 or whatever, 177, give or take, depending on where we're in there, like, am I willing to buy some there and some more at 160? Because if it breaks and I buy them at 177, why would I assume it won't continue to go lower? So make sure I'm pushing my risk or I'm triaging my risk at different levels so that I'm not getting it all at once.
Yes, I like that answer too, by the way. That was a nice explanation of the way that this can absolutely go. And I hope the takeaway is that if nothing else, there are alternatives, everybody. There are many ways to go about trading the marketplace. And one of the key ways that we've covered today, the use of options, whether that be long call verticals, short put verticals, these are ways that traders incorporate the moves, but do so at limited risk by relationship wise, right? Because, a call option that costs you $4 is a $400 exposure versus buying 100 shares of the underlying stock at $180 a share. That's an $18,000 trade. I mean, that's not small dollars. So hopefully what we've done is kind of open your eyes a little bit. And if you'd like to learn more, everyone, these concepts, these strategies are concepts and strategies we discuss here on the channel all the time. So what I want to invite you to do if you're looking for more from us, come to our page, which we've got noted right here, of course, the Trader Talk homepage, and you can use this search engine right here and just type in your strategy. So as an example, if you're looking for call verticals, just type that in right here, hit enter, and you're going to get a list of all the various classes where we have talked about this in the past. Lots of opportunities to engage with us. We'd love for you to follow through and do that. So as always, Mike, love having you. I know I only get you once a month, but once a month is absolutely wonderful. Thanks for being here with me, buddy. I appreciate it.
Sound like once a month's was enough for you, but I'll take the compliment anyway. And just just on a tail end of what you're saying here, these are amazing sessions. I would also encourage folks, if you're not using the Thinkorswim platform, to maybe take a look into that and start thinking about using the paper money to start to plan out your strategy and watch it, kind of react live before you start just jumping into the water, so to say.
I will echo that sentiment as well. So big thanks to all of you. Check the notes here, everybody. We do have this particular, that chart that I shared from Rachel is in the notes for you. Thanks for being here. Follow us on X. Hit that thumbs up button down below if you don't mind. Look forward to seeing y'all again real soon, everybody. Have a great Monday.